The stock slide after the rupee sinks to a new low. The rupee against the US dollar, auto and metal stocks gain, while consumer durables and realty are the big drags.
Mahindra & Mahindra and Bajaj Auto post mostly inline wholesale numbers in November. Tractor sales particularly see a strong pickup, with both Mahindra and Escorts reporting high double-digit growth.
Wockhardt has received an approval from the US FDA for its novel antibiotic Zynic, making it the first by an Indian company to get a nod in the US for a new chemical entity. This follows the launch of its science-driven program in 2011. The stock is up 17%.
India springs a GDP growth surprise, with Q2 seeing an 8.2% print versus an estimate of just 7.4%, though nominal GDP growth is just 8.7%. Most economists revise up their FY26 forecast, but the data sparks a debate over a rate cut. CNBC TV 18 citizen MPC votes for no cut.
And India's Commerce Secretary says a framework India-US trade deal should be completed by the end of this year to address reciprocal tariffs. The bilateral trade agreement, he adds, will take more time to conclude. Good afternoon. You're with us here on Business Lunch. We are coming to you live from the CNBC TV 18 Motilal Oswal studios. I'm Hormas Fatakia, and from the India Business Hour to Lunch Hour, we are being joined by Arundhati Ramanan.
Absolutely. Hi, Hormas. Absolutely. It's very exciting to be in this band and covering the markets now. But you know, what a day it's been for the markets, right? Hitting all-time highs, then in the red. Tell us more.
It's been choppy, to say the least. And at least is what the GIF Nifty was indicating. We would start off gap up. And we did start off gap up. We made a new intraday high above that 26,320 mark, but then ever since the rupee started to depreciate, we've come off the highs. There are a lot of triggers to track this week. There are auto sales that are coming in thick and fast. The RBI policy comes in, and there is a lot from the globe that you need to monitor as well. So it will not come as a surprise that we still remain in this very narrow range until we get into the policy decision on Friday, and then we take the action forward from
Absolutely. And like you pointed out, right, one of the things that was making the market extremely jittery today was that big fall in the rupee. It touched 89.76 on the lower end. You know, if we take a look even at the mid-cap index right now, it's absolutely flat, coming off the highs from the day. But, you know, there were some standout stocks. If you see, Wockhardt is up 16% after regulatory boost. There's JM Financial that's up 8%. IEX, which is up about 5%. The Auto Pack also doing well, and the IT index also doing well over there. But first up on the show, the rupee touched a fresh all-time low of 89.79 per dollar, which made the Indian currency 34 paise cheaper over its overnight close. Dealers blamed lesser supply of dollars from the RBI for the rupee fall. Lata Venkatesh is here with what she is picking up from the market. Lata, a big fall there on the rupee.
Well, the dealers at least tell us they don't have any fresh reasons. Probably it's yet again foreign portfolio investors pulling out, selling equities and taking dollars out of the country. It is possible that there is a slightly higher demand because the very strong GDP number indicates hints that probably there is no rate cut from the Reserve Bank. So further incentive to buy Indian stocks may not be there, and that's maybe making people go, or people are just taking position that maybe the Reserve Bank will not cut, and therefore, people will pull out later. So, speculation is people are just trying to outguess one another. Nobody is speaking of a very large FPI demand. It seems to be the usual demand, but it seems like the Reserve Bank has let go. Usually, the Reserve Bank keeps supplying dollars, but once in a way it lets go, and there are various theories on why it is allowing, the rupee closed at 89.45 on Friday. It let go the 89.50 mark, which was a surprise. Everyone thought 50 was a line in the sand. Maybe because, once the rupee becomes cheaper, then the current account deficit will automatically correct, because every imported item, the dollar is being multiplied by 90 instead of 85. So you will not import. That would be a natural market-determined way of checking trade deficit. There is another explanation that, when people are moving out, why should they move out multiplying it by 89? Let them get only 88 when they pull the dollar out. So the Reserve Bank is allowing the rupee to fall. There are all these kinds of explanations that are trying to reason why the Reserve Bank did not support as much as it was expected to support, why it did not support up to 89.50. The other explanation was also, again, more a running commentary on the market. There is something called a fixing. That is, month ago contracts get rolled over. There is a particular time by which it gets rolled over. The explanation is that the Reserve Bank did not roll over all its sell contracts, and that also caught some people, on the wrong side, and they had to cover in a hurry. All told, the Reserve Bank is always of the view that we don't we don't have a level of the rupee, we only control volatility. So you shouldn't be surprised with these one-off moves, which is more to trap speculators.
89.76, the intraday low. But Lata, also stay on and tell us if the strong GDP data is having an impact on the market expectations from the RBI on Friday.
Well, it did have an impact. The GDP number did have an impact on the bond markets on Friday itself. Remember, the bond market trade still 5 and the GDP number came in at 4. We saw yields rising by about 4 to 5 basis points across the curve. And today, again, the yields are up by another 1 or 2 basis points. I mean, the overall reaction has been more than 5 basis points. The fear in the market is that the Reserve Bank may want to keep the powder dry for a rainy day. What if there is a debacle in global markets and you want to help? After all, the fiscal window is also shutting. The government is in a mood to keep fiscal deficit low. So maybe the Monetary Authority should keep some ammo dry, is one view that the Reserve Bank may not cut. As well, when we asked our Citizens Monetary Policy Committee, that committee surprisingly voted 3-2 for a status quo. They said they do not expect or do not want the Reserve Bank to cut simply because, again, for the same reason, that growth doesn't seem to need. After all, the governor has said that we have low inflation has given us space to cut. But maybe he will say there is space to cut, but there is no need to support growth at this juncture. So the market is quite clearly, more fence-sitters have jumped to the side of a possible status quo, no cut, and that's pushed yields up.
So we'll have to wait and see what happens on Friday from the RBI. Thank you, Lata, for taking us through both those key triggers for the market. But moving on, Sriram Krishnan, the Chief Business Development Officer at NSE, joined us earlier today and discussed the exchange's potential listing and also gave us updates on how the market share dynamics were panning out. Take a look.
As far as NSE's IPO is concerned, that's dependent upon the regulatory clearances, and it will happen when it has to happen. See, the industry regulator has to approve first, and then SEBI has to approve. In our case, SEBI is both the industry regulator and the capital markets regulator. So that's what we are waiting for. As far as equity options are concerned, if you look at August 2025, our market share was 76.9%. And I'm picking August 2025 because effective September 1st, 2025, we changed our expiry day for index options from Thursday to Tuesday. But if you see since then, if you look at November 2025, for example, our market share in equity options has gone up about 10% to 87%. So I think the market participants have accepted well to the change of expiry day from Thursday to Tuesday, and Tuesday seems to be working well for us. Many brokers have in fact gone and represented to SEBI requesting that Bank Nifty be allowed on Thursday. Because that used to be the biggest product in the whole world within the umbrella of equity derivative contracts. And I think the market participants have been missing Bank Nifty for a while now. And, as an additional weekly expiry, if that's permitted, let's say on Thursdays, I think that will really help the market. And, hopefully, SEBI can permit one more weekly expiry per exchange.
Well, the first major trigger of the day that we were talking about all through the morning were the auto sales numbers for the month of November, and the numbers have been trickling in thick and fast. Sudarshan is here with the highlights of the numbers that have been reported so far. Sudarshan.
So the numbers have come so far have been largely in line or slightly beat to our expectations. Commercial vehicle segment, as expected, has done good. Two-wheelers, TVS has been a big beat, while Bajaj Auto sales are largely in line. And the main reason for drag for Bajaj Auto is domestic sales, which have seen a decline of almost 1%. In passenger vehicle, M&M Auto has just reported the numbers, and numbers are looking healthy. And in the commercial vehicle segment, Ashok Leyland has reported sales of 29% versus our expectation of around 16 to 17%. So in the two-wheeler segment, Bajaj Auto total sales have increased by 8%. As I told you, domestic remains a drag, while exports and and three-wheeler segment have seen a healthy growth. For TVS Motor, it was an all-round beat. Total sales have increased by 30% versus our expectation of around 22%, and it has recorded strong growth in all the segments. One segment, even three-wheeler, that has seen a growth of more than 100%. Even EV segment has seen a growth of almost 50%. Talk about Mahindra & Mahindra Auto segment has seen a growth of 19%. It continues to lead by SUV segment, which has registered a growth of more than 20%. Exactly, it was 22%. And Tractor too has done better than our expectations. Total sales have increased by 32%. As I told you, commercial vehicle segment surprisingly, and also Vahan data was indicating of a healthy growth, and Ashok Leyland has reported very healthy growth. Total sales have increased by 29%, and here also all the segments, you talk about truck, you talk about the bus, all the segments have seen a healthy growth. And I was talking to M&M management, and he did say that new cycle for commercial vehicle because of recent GST rate cut has begun, and that also will help or boost commercial vehicles. So far, so good. All the companies have reported numbers are largely in line or mostly better than expectations.
So most of them reporting numbers better than estimates, and that auto pack doing very well in trade today. Thank you, Sudarshan, for taking us through those details. On that note, it is time for us to head into a short break. More news and updates are coming up on the other side. Stay tuned. Welcome back. You're still with us on Business Lunch. Markets absolutely flat right now. The winter session of Parliament began today, and the Lok Sabha has already been adjourned till 2 p.m. amid ruckus over SIR and other issues. Several key bills, including the Health Security and National Security Cess Bill, will be deliberated upon in the session now. Let's listen in to what PM Modi had to say before the session began. Take a look.
भारत की आर्थिक स्थिति नई ऊंचाइयों को प्राप्त कर रही है। विकसित भारत के लक्ष्य की ओर जाने में ये हमें नया विश्वास तो जगाती है, नई ताकत भी देती है। साथियों, ये सत्र संसद देश के लिए क्या सोच रही है, संसद देश के लिए क्या करना चाहती है, संसद देश के लिए क्या करने वाली है, इन मुद्दों पर केंद्रित होनी चाहिए। विपक्ष भी अपना दायित्व निभाएं, चर्चा में ऐसे मुद्दे उठाएं, मजबूत मुद्दे उठाएं।
Now, Finance Minister Nirmala Sitharaman tabled the Health Security and National Security Cess Bill. Timsy is now joining in to explain what this bill is all about.
Well, Finance Minister has tabled the Central Excise Amendment Bill 2025 and Health Securities and National Security Cess Bill 2025. The two bills aim to change the composition of indirect tax levies on tobacco products and pan masala. Under the Central Excise Amendment Bill first, well, Centre proposes here to realign excise duty on cigarettes, cigars and tobacco products like gutka. The excise on cigarettes to vary from 2,700 rupees per 1,000 sticks to about 11,000 rupees per 1,000 sticks, and the excise collections do get collected in the divisible pool, so states do get the share as per the Finance Commission's sharing formula of the revenues. When it comes to the changes, well, they'll kick in post the discharge of the back-to-back loans taken to compensate the states on the COVID losses on account of GST, and the new rates after these changes come into effect will be 40% of GST plus the excise duty. That's it. No more compensation cess or any other cess will be on cigarettes, cigars or these chewing tobacco products. When it comes to health and national security cess, that is proposed on pan masala only. Again, this will be levied on the production capacity, and the collections will not be shared with the states over here. Centre is very clear that they will use this fund for the purpose they are collected for, that is for health and for national security. Also, government reserves the right and power to notify a hike in the rates of these two cesses anytime, whenever they feel, and also an enabling provision that gives government the right to add any other item to the list on which these two cesses can apply. As of now, it will apply only on pan masala. And again, once the back-to-back loans are cleared, the changes on the pan masala will be that there will be a GST hike from 28% to 40%, and the remaining, there will be no compensation cess. Only cesses, the two cesses, that is health and national security cess, will come into play.
Timsy, thank you for that update there, and it is a very important bill that we will keep a track of going into the Parliament session as well. But as we take a short break, here's some good news for our viewers. India's business news leader is now just a click away, introducing the CNBC TV18 all-new app where you get instant updates, breaking news and financial world articles right at your fingertips. You can download the app from the App Store or the Google Play Store, or even scan the QR code that comes up on your screen. Let's take a short break. We'll be right back on the other side. Welcome back. Now, Russian President Vladimir Putin will be on a two-day visit to India between the 4th and the 5th of December. The Ministry of External Affairs has confirmed that he will be attending the India-Russia annual summit. President Putin's visit is expected to strengthen the special and privileged strategic partnership between India and Russia. According to the Foreign Ministry, Prime Minister Modi and President Putin will hold talks during the summit, focusing on defense, energy, trade and bilateral relations.
And speaking at the 98th FICCI AGM panel discussion ahead of Putin's visit to India, Defense Secretary Rajesh Singh said that India's defense relationship with Russia remains steady. Take a look.
A lot of legacy equipment from the Russians and maintenance and support. And even there are also some orders like the S-400s where they've been delivered partly. So obviously all of that will be on the table. In terms of new announcements, I will not be able to sort of mention those, but our defense cooperation with Russia is of long standing. They've been our friends through both fair and foul weather, and we are not going to sort of stop our defense cooperation with them anytime soon.
Meanwhile, Commerce Secretary Rajesh Agarwal told CNBC TV18 that a trade deal is expected even as regular virtual talks continue between India and the US. Now, he also added that a larger trade deal is also underway. Listen in.
The assumption is that a trade deal will be beneficial for Indian exports only when there will be addressal of both 25% tariffs, not only the one which is a trade tariff which has been imposed on trade in lieu of the lack of trade deal, but also the other 25% tariff which have been imposed for some other geopolitical reasons. Until unless both are addressed together, it will not mean a meaningful deal for India.
And with that, it is a wrap on this edition of Business Lunch from Horvaz and me. Goodbye and many thanks for watching. Midcap Radar comes up next.